By the way, we have a very special guest who will join us, in I think the next couple of minutes on the show. I think we do have him right here with us, Mr. Dinesh Kumar Khara, Chairman of State Bank of India. Mr. Khara, it's great to have you. Pleasure to have you with us on the show today. Lots to talk about, including the environment, policy roadmap, and how you're seeing, of course, lending trends shape out. But tell us, I mean, we're rounding up the first quarter of this year. How is the sentiment on ground? And I think when we started the year, the whole premise was whether this will be the year when corporate credit will really start taking off. Do you see signs of that happening?
Good morning. First of all, thank you very much for having me on your channel. Well, of course, what we expected, we actually get to see on the ground, and also the kind of initiatives which are now being taken in terms of push to the infrastructure. So I think this will eventually culminate into growth all around, and this will be seen in terms of growth in SME, growth in private borrowing also. So I think it's a very positive sign which we get to see on the ground, and hopefully monsoons will also turn out to be good this year. So which also means that the rural economy will also be looking up. That's how we are reading the things currently.
So it always helps. I apologize for this, but we have to look at some numbers. So if you could put some numbers to it, what is the target for you that you've set forth in terms of credit offtake this year? And how much will be driven by rural? I mean, what will be the target on the rural side? And how much, again, I'm going back to the question, corporate credit growth, what can be the numbers or some range that you think we'll get this year for SBI?
Yeah, sure. We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. So this is something which you have already planned for the current year, and we get to have a similar sense when we see the activity on the ground that there is enough ample demand. That is something which is quite encouraging.
Sir, just a question on credit growth, and we'll have Latha joining in the next couple of seconds as well. I remember the previous RBI policy, and I remember categorically what the governor stated. He said, this is unsecured lending, and he said, we're watching all the incoming data very, very carefully, and then we'll evaluate whether any further steps need to be taken. What's your sense on unsecured? There's been a marked slowdown. The FY24 numbers, if I remember the numbers correctly, from 23% growth on the unsecured side, it came down to 17%. What are the trends now? And, would you anticipate any more central bank action on this?
I think as far as unsecured credit is concerned, at the material point of time, we were seeing that there were many entrants into the unsecured lending space. And also they were getting into lending without really evaluating the repayment capabilities. And that is the reason why RBI came down in terms of increasing the risk weights. But what we observe is that as far as we are concerned in State Bank of India, our unsecured loan book is pretty good, because we are actually offering unsecured loans to those who are maintaining their salary accounts with us. So that is one of the reasons why perhaps in terms of our quality as far as the unsecured loan book is concerned, it is the best. So we are seeing the growth which is reasonable in terms of what we have seen in the previous year as far as unsecured credit is concerned. So I think we don't see any challenge as far as our unsecured credit book is concerned.
Mr. Khara, more than credit, I guess it's deposits that all of you bankers are chasing after. What is the state? Do you still have to does the system have to still up deposit rates?
Well, as far as deposits are concerned, it is normally seen during the inflationary conditions that depositors normally chase for the better yield instruments.
So there is no inflation now. There's no inflation now, sir. It's below 5.
No. But at the same time, we have always seen that, in such situations, people would be looking at a real return, and which would be plus of the inflation, whatever it is. So that being the scenario, that is something which you have seen, that moving of money from the deposit to the markets. I always believe that there is a process of stabilization in all these markets. So we hope to see some kind of a stabilization in this trend also. What we have already seen, if at all, it is some kind of an indication. If we compare I mean, growth in deposit on a first quarter basis, we have seen a slight improvement in the deposit growth for the banking system in the current quarter as compared to what we had seen in the previous quarter. Having said that, I must also mention that deposit is also a function of liquidity in the system, and liquidity in the system has been just adequate. So that is the other reason why perhaps not excess liquidity being in the system is also one of the reasons for the kind of trend which we have seen. But yes, of course, when it comes to CASA, it is almost at a pre-COVID levels. So I think, of course, it has come down as compared to what we have seen during the COVID. So it should not be as much of an alarming situation for the system. But nevertheless, yes, this is a reality in which
So is quarter on quarter your current and savings have improved as a percentage of the total deposits?
Absolutely.
So
Absolutely.
what does all this mean for margins? If not current and savings, but time deposits are still being chased by bankers, should we expect some margin, crunch for the banking system and for yourself?
I think for the banking system, I have not got a clear visibility of the data. I would not be in a position to comment. But as far as we are concerned, we have slightly tweaked our deposit rates in some structure, in some periods for the term deposit. And likewise, we have also tweaked our MCLR because there was elbow room which was available.
Yes.
And that was something which helps us in ensuring that there should not be any impact on the NIM. And as far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
Oh, that's good to hear, because there was a worry about a few basis points lower NIMs for banks. Now to come to what Surabhi was asking you about loan quality. We hear about MFI loans under pressure. We hear about unsecured loans under pressure, credit card loans under pressure. What's the situation in SBI?
As far as we are concerned, we don't have a challenge as far as our unsecured book is concerned. I've said it in the past also, and even now also I maintain my stance, because when it comes to our unsecured book, we are extending that to those who are maintaining their salary accounts. We have got a very clear visibility of the money flowing into their accounts, and we are very mindful in terms of their repayment capability, etc. So we don't have any challenge, and our unsecured book stays as good as it used to in the past. And
But
as far as
MFIs,
MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress. In fact, in our case, we are seeing even better trajectory as far as the loan growth to the MFIs are also concerned, and also the quality of the loan book also for the MFIs.
Okay, that's good to hear. Now, the big trend, and yesterday we went, gangbusters reporting it, is the way in which promoters are taking advantage of this stock market largesse. So much of either fundraising or people, selling off their holdings. When are you coming to the market? You have a lot of subsidiaries.
No, as and when there would be a felt need, we will certainly reach out to the market. But we look at all possible options, and we evaluate them well in terms of the cost. So that is something which is a deciding factor and the guiding factor for us. So
need is when you need, the market won't be kind. And in any case, your CET1 is lower than other banks, maybe with good reason. You have a huge government holding as well. But nevertheless, you can want your CET1 to be equal to the other banks if you wish. The market is kind. So should we expect anything?
I would like to give a perspective when people talk about the CET1. The CET1 should be seen in the context of the RWAs. And, if at all my CET1 is being compared, when my RWAs are 52%, is being compared with somebody who has got a RW of 85%, it's not a fair assessment. So I think that has to be kept in mind. So from that perspective, in fact, what we have seen is that in last about 3 years' time, we had brought back about 1.10 trillion worth of profit into the balance sheet. So that itself has given us the muscle. And even at the current level also, we have got adequate...
No, Mr. Khara, I'm not alleging that your balance sheet is weak. I'm only saying that you can always want to... You can always want to increase the CET1 because the market is in a good spot. So anyway, I mean, without all these arguments, are you looking to tap the market, and which subsidiary would you look at?
As far as subsidiaries are concerned, we have not yet given a thought. And as far as bank is concerned, we certainly intend to raise some money from the market, which should be either in terms of bonds.
Okay.
So that is something which have already come on. It is already in the media also. And we keep on evaluating our balance sheet position. And even at the current level, we can safely support another 7 trillion worth of asset growth. But yes, of course, we keep on evaluating our capital position. And at the right and opportune time, if need be, we will reach out.
So not ruling out an equity capital raise this year, sir? You're not ruling it out. It could happen.
So I always keep the options open.
Okay. So one more expected credit loss. 1 minute.
Surabhi, 1 minute. On that. Latha, that's exactly what I was asking.
Yeah, expected credit loss, sir. Are you expecting RBI to pursue it? What is the status now?
Regarding? Sorry, I could
expected
not get you.
Credit loss rules. The expected credit loss rules.
I think if at all it comes for banks like us, we have got excess provision which is there with us. It will be rather good. But yes, of course, it is a decision which has to be taken by the RBI.
Okay, so that is on ECL. I mean, in the past, you've had a view on it that perhaps it's not something to be sort of too concerned about. But just any further sense on if the norms come in the format in which they were discussed, then what could that mean for SBI? That's on one hand, and the other burner that we've got burning is on project financing, right? You said right now there's no risk on the horizon, but the RBI is clearly trying to shore up the buffers, as the credit cycle picks up on the corporate side. So on the project financing norms and the higher provisioning requirements that are being spoken of, what's your view there?
See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. Your second question relating to the provisioning for the project
financing.
Yeah, it was essentially, as of now, it's a discussion paper. I think the deliberations are going on. Various stakeholders are reaching out to RBI with their views. I'm quite confident that RBI will be giving due cognizance to the viewpoint of various stakeholders and will come out with some kind of a measure which will be balanced in terms of its nature. So that's what my sense is. But yes, of course, we are evaluating. For us, we are not envisaging any challenge. But yes, of course, we are very mindful of the views of various stakeholders, and we have to keep that in mind.
So provisions may go up, you think, if it is almost the way the discussion paper is?
No, again, if at all it comes through the ECL structure, then perhaps it will undergo significant change.
Okay, so I think we have to just wait by and see what the final guidelines are on this, and then of course we'd really be, happy to get your perspective on it. Thank you very much, sir. Great conversation with you. Really appreciate you taking out the time this morning.
Thank you.
That is the word. Thank you so much. That is the word from State Bank of India. Right.